Hello everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, May 27th, and I'm Michael Boutros. Good to be with you here guys this morning. Ty, Dan, Pramendra, Eileen, good morning to all of you. Great to see you. Mark, GS. Hey Mark, was that you by the way with the Euro-Oz yesterday? I want to go over that trade actually. I actually took that trigger that we were looking at right into the end of the session. I got stopped out at like a 6 pip gain. I'll go over it with you in a moment, but there actually was the move there. So good eye on that one. We'll take a look at it. All right. So yes, it was Mark. All right, Mark. That was a good call yesterday. We'll take a look. Steve, great to see you as well. So the dollar. You might have seen a tweet from me last night looking at the dollar index saying the dollar is contemplating the word resistance. Yeah, that doesn't look like it's something that's in the comprehension for the dollar index. Again, we made it through near-term resistance that we were looking at yesterday, guys, right into that 11,960 mark, which was the 618. The pullback was highlighted here in yesterday's radar chart. I tweeted this last night as well. So we got the pullback into near-term support just ahead of the confluence there of some median lines. I'll show you the zoomed out figure of this in a moment. Really, really clean. With momentum, look at that. Exact 40 hold. You saw a nice rebound there as you head into the start of European trade, right through 960 resistance, topside resistance at this point, 11,990. And then there again, you have the upper median line parallel of the current formation we're in, and 100% extension from the advance off the lows. So if you zoom this out, it's a little bit clearer. You can see what we're working with here. Again, on the daily chart, we've been looking at that same region. So here's what the dollar index looks like on the daily. All right, there was that confluence. We had this in grid format. Couldn't really validate the use of that median line formation just yet because we hadn't had many tags of it. Again, with the 618, you would have figured this would give us more resistance. Here we go, 11,990. So the euro crosses or the dollar crosses that are in focus, obviously a lot of this is propagated by what's going on in dollar yen. We'll take a look at that. But first things first, let's jump right into the featured scalp. So quick relative performance of the greenback, guys, ahead of the US Open does see us stronger against all our major counterparts. Specifically, again, the yen down 1.25%. Aussie with a big decline today, down 1.14%. Kiwi, we actually made money yesterday on the upside on that swing off of support. We'll show you that in a moment. That's on Kiwi dollar. CAD, euro down about 1%. British pound, best performer, only down 0.55% despite the strength and advance we're seeing here in the greenback. So it'll be an interesting session. There's not really much on data on tap today from the United States. Obviously, we got the BOC, which is coming up shortly. We'll be looking at the dollar CAD, which was also in yesterday's radar. Here's what dollar CAD looked like. Whoops. I'm sorry. This was the dollar CAD chart. Here was the dollar index chart that we were just looking at. Again, the pullback into support is almost the same exact setup. And then the launch right into 11,990. But the dollar CAD setup remains in play as well. And again, that actually stretched into the 124.84 barrier. We just missed it. We haven't quite reached it yet. I still think you're going to get the move right into it. And again, that's the top side objective. You're looking at 100% extension off the low and a 618 retracement off the high. My favorite setups. By the way, I just wanted to zoom this out, guys, and show it to you on a broader scale for the dollar CAD. You know, these slope lines have continued to give us really, really nice guidance. And again, if you take the broader slope of the formation that we've been in the last 3 weeks and just take some sliding parallels off that same slope and connect them to the major highs, you can see we've been pivoting very nicely here. And we highlighted this last night that this was going to be the bullish invalidation level as long as we stay above this. You know, you're looking for that stretch into 124.84. 125.02 is going to be the 100% extension. And again, the median line comes right in that at this point as well. All right, so dollar CAD looks really poised, really well ahead of the BOC. If you get a very dovish stance on BOC with the dollar strength that you're seeing, you really wouldn't get caught up in anything on the long side here, guys. I really need to clear this entire sort of region to get comfortable with a little bit more of a stringent long side exposure. Let me snap these trend lines for you. Sorry about that. You need to get through that 125 target to get the upside sort of clearance, let's call it. If the BOC comes out with a little bit more of an everything looking good and rosy. We're following pace with the Fed, or if we start to see them start to give us a little bit more of a positive outlook on a strong dollar CAD move, look for a spike into this region, 125.02, 124.85. That might actually offer a nice opportunity to get back on the short side for a near-term pullback. Those are the scenarios we're playing. Again, playing interest rate decisions is never really as easy as playing a non-farm payroll or a CPI print, or something that's a little bit more of a quantifiable metric, right? Because the devil's in the details. We're going to have to see exactly what type of language comes out with the statement. That being said, longs are at risk here into 125. That's going to be the near-term bearish invalidation level. And again, a topside pop above that. You're looking for, if we do clear this, you're looking for a stretch into 125.59, and that's actually the 2015 high day close. Okay, so if you take back to the dollar CAD daily, you can see that right here. This massive day that we made on the 18th of March, despite the fact that was the day that the high was made, we actually closed way down here at 125.59. Okay, near-term resistance for dollar CAD if we break 125. On a downside move, again, you're initially going to be looking to target that lower median line parallel. Again, depending on where we are in time, at the interest rate decision, you're basically looking at the 124 handle. And then the bullish invalidation level, or the thing that would shift the broader focus back to the downside, would be a break below 23.75. So we'll see how the BOC interest rate decision comes out just after the close of this webinar. Keep in mind, this would be working on our 4th up day consecutive. Last time we saw 4 up days consecutive was right here. We actually made it 4th day, 5th day pushed into a new high, and then we collapsed. So ahead of that, this was a 5-day stretch as well. You took a 1-day break. Here was a 4-day stretch. Took a few days, actually took a week or so before we continued higher. So just some things to note here as you head into the 125 barrier for dollar CAD. Any questions on that? That was on yesterday's radar chart with the breakdown for you right here. All right, let's jump into the Euro Yen, which is the first primary chart here. Here's what we were looking at yesterday with the Euro Yen. Support barrier 132.80 into 133.09, which was the opening range low for the month. The actual low came at 133.089. So we literally tagged the opening range low. You got a nice reaction on the pop there. And here's what we look like today. Okay, so the broader upside focus from a scalp perspective hasn't changed. We went right back into 134.50. If you guys remember, we were looking, this is what we highlighted yesterday here in the webinar as this thing was breaking through the opening range high. That's exactly where we maxed out, is a 618 decline from Friday's low. And again, this broke the opening range high for the week. So we remain constructive, broadly speaking, above that level. Momentum remains a little lackluster with some divergence here on these highs. So you could get a little bit more of a pullback. Bottom line, again, another pair that has exquisite parallels. Let's just zoom this out real quick. So this is the operative pitchfork that we've been working on. That's the one that you also see here on the daily chart. Okay, but on an intraday basis, if we take, again, some sliding parallels off the low and last week's swing low, we've still been playing right within the confines of those. And I tried to leave this on the scale chart for you to give you a little bit more of a view. Here's yesterday's scale charts. Okay, and that's exactly, again, on a closed basis for the candles, almost what caught the high exactly again on the stretch. So use these to your advantage. I mean, right now, near term, as long as you stay above, well, you're coming to support at 134, but as long as you stay above 133.60, yesterday's low, we'll be looking for possible long triggers. Now, the caveat here with Euro Yen, by the way, guys, just want to put this out there, is that we've just carved essentially a low for the week and a high for the week. So again, it puts now the stress on this range between 134.50 and the low that we made. And the other thing I just want to stress real quick is that you did get those headlines out of Europe today. Don't really want to stress them. Yeah, Greece says talks are breaking down. They might not be able to fulfill obligations. Nothing's broken anything major just yet, okay? The euro dollar is what's concerning me for the Euro Yen here. If I had to play a euro cross, I'd probably still be a little bit more favorable towards EURCAD, which we'll look at in a moment. But euro dollar, here's what it looks like. on the daily. Okay, the major support break that we had basically on the start of the week here of 109.92 really put this out of the focus for us for trying to play any type of upside swing for the euro. Near term 108.80 is the 618 retracement. We closed just below that yesterday, and on the near term charts it did have us at support. So the upswing failed. You saw another move below 108.80. I'm looking for a move basically into the 108 handle, and that's going to complete 100% extension from the highs that we made for the month. So with the news that's coming out, and the momentum breakdown that you saw sub 50 last week, the break below the median line parallel, and the yen obviously showing some extreme weakness here, down 1.2%. That's my concern with really trying to play the aggressive side of euro yen at this point. A little bit more favoring EURCAD as well. That being said, nothing's really changed as far as the actual setup's concerned. All right, so we remain constructive above 133.50. Might get a drop back into this median line here. Look for momentum to hold 40 and a topside trigger to possibly get back on the long side of euro yen. One thing I do want to take a look at real quick is if we've completed any extension off the high here. And I'm not going to stress that 786. Okay, we're good. Also, let's see. Okay, just missed that 764. It's 134.80. Leave that there as well. Okay, and it looks like euro is going to continue to make this move lower here on euro yen. So we'll put this one aside, guys. We'll leave this one under neutral for now. I'm not really going to mess with it. We'll see if we can find some support as we head into the U.S. Open. Again, still going to be looking for long triggers. Nothing's really changed. I want to see if that 40 level holds. If we crash sub 40 and make it below 133.60, at that point, we're going to kind of see if this thing settles back into that 133 key support region. Remember, that's the whole premise of where we came into the week, was this rebound here. So if this fizzles out, momentum continues to carve a lower low, and we break 40 in intraday, probably see this thing start to move off again. Remain constructive, broadly speaking, above 133, 132.79. Again, I know swing trades were also in this on the long side for the swing. That stop's been moved in to break even. So just keep that in mind. That was tweeted out last night on the Squawk. All right, moving right along. Kiwi dollar. This one's a little bit more of a preferred play at this point. Here's what the daily chart looks like for Kiwi. So the decline, obviously, we were looking to start the week 72.84. We closed just around those levels. Here's the 72. Where are we? 72.84. We closed just above those levels as we headed into the close of last week. Remember, this was the pivot and the support that we were looking to be our bullish invalidation as we headed into the close last week. Remember, we shifted our attention to the upside heading into Friday. We crashed right through it. We scrapped that upside bias. We opened this week just below it as resistance. And the game plan that we talked about yesterday, guys, was the fact that, or earlier in the week, is the fact that the opening range was super tight below resistance to start the week. So right off the bat, you have a very clear bearish invalidation level, and you have something that's going to confirm the downside bias if you move lower again. Right? Momentum on the rally here, at least in momentum, not really in price. You saw it fizzle out ahead of 40. Nice trigger break to the downside. Even came up and checked it as resistance. Everything looked lower. Yesterday's scalp was a long scalp that we took on the Kiwi here, just based on the divergence that you're seeing in momentum. And then you got a trigger break here that shifted the upside bias into play late last night. Again, we can just look at the live chart here at the 5-minute. Here's what the Kiwi look like, and there was the trigger, right? So even on the 5-minute, guys, okay, 2140, right around this area right here, even on the 5-minute, you can see this is a divergence, the subtle divergences that you want to pay attention to. Okay, price dropping into a new low. Again, if you can't see it with the wicks, bring it to a line chart. Lower low, higher low. Trigger break. You're in the trade. Okay. Stop is against the low. You're looking for about 24 pips. On the upside stretch here, obviously this is in the wee morning hours in New York. I'm not I wasn't up for this, so we had a limit to take out, what was this, 3/4 of the trade or half of the trade at 20. Stops were at break even at that point, and again, on the pullback, we got stopped out at break even. Why are we so quick to pull out stops to break even, guys? Again, on a move like this, it's counter trend, right? No one's going to debate that this is in a clear downtrend, and we're playing the upswing. So on trades like these, as soon as you take something off the table, you bring that stop to break even. You're not trying to get greedy. You're not trying to get the stretch into the next target per se. You want to leave something on the table so if the upswing does materialize, but you're recognizing that the broader bias is still to the downside. Okay, so at this point, again, we're testing that major key support. Broader downside bias remains in play. Just keep in mind that at this point, if we make a new low here, it's going to be some more divergence with these lows. So I'm not really interested in playing the short side of the Kiwi. If we break down from here, 71.74 is really the next target. And that's going to be the 2011 low day close. And then 71.46 actually will materialize into the 100% extension off that decline. Bullish invalidate or bearish invalidation, no change. Same level that we were looking for as key support to open up the week is now the bearish invalidation, and that's 72.84, which coincides with that median line yet again. All right, so only a break above this will really shift the topside focus into play. You're looking for 73.20 in the upper median line parallel. As long as you hold below this, you're looking for that drop into 71.74. My only other concern with trying to play the short side of the Kiwi at this point, guys, besides the fact that you're at, fresh monthly lows here, is the fact that the dollar index now is at the next resistance target. And I know we keep, eyeing these resistance targets for the dollar, and they keep blowing through. But, on a near-term prospect, they have all offered a pause in price. And that's enough to get our scalp, or at least hit the efficacy of how deep the scalp will go. So just keep that in mind there. If you see a breach from here, there's really nothing until like 12,060, 12,040 here. No, not even 40, 12,060, 12,050 on the upside. That's going to be the, again, a longer dated median line that we've been following for the dollar index for a couple of years. And 12,071 actually ends up being the reversal day close. So right after we made the high here in April for the year, the subsequent reversal day, which snapped a 3-day advance, the close of that session, came in at 12,071. Near-term support, 11,960. It's going to be the same level we were looking at on that intraday chart, 11,960. Okay? So keep this in mind as you head into U.S. trade. By the way, again, just a quick reminder for anyone who's new to the room, I do see some new names here. Feel free to click on the camera in the top right-hand corner of your GoToWebinar screen. If you want to take a snapshot of any of the charts that you're seeing presented here today, please feel free to go ahead and do so you can reference them at your own leisure there. All right, so that is the Kiwi dollar. Still in focus on the downside here. As long as you hold below 72.84, you're still at risk. We'll see if we can get that reaction here. You don't really have much data from Kiwi. You have the building permits on tap, but tomorrow, or heading to Friday, excuse me, guys, don't forget the main event for the dollar process is still going to be that GDP first quarter second read, okay? And we are expecting a pretty big contraction of 0.9%. That would be the first contraction since the first quarter of last year. EURCAD was the final trade here that's been presented on the intraday strategy page, or the intraday page rather. Here's what we looked like yesterday. Oops, got these out of order. Sorry about that. On the daily. So, Jamie has a beautiful median line here connecting the wicks that actually caught this low. I actually added it on after I posted that chart. Here's what EURCAD looks like on the daily. Okay, this one right here. Nonetheless, the close basis is what we've been focused on, keeping the upside bias in play, and that was the confluence of the 50-day moving average, which is not something we'll stress, but also a basic trendline support off the monthly low. So we did hold above that. Momentum is sub 50, but this flattening here, guys, doesn't give us any type of conviction. Remember, this is only based on the closed price. So when you get back-to-back doji-like candles, it shouldn't be surprising at all. So the daily chart doesn't really give us much guidance at this point from a momentum standpoint, only to highlight that we've just made a pretty massive opening range for May, and we've been sitting in that range ever since. Near-term support, still 134.13 into 134.06, or 134 rather. Resistance, if we break the weekly highs, you're looking for a rally back into that upper median line parallel, the 50% retracement. There's a lot stacked up here. Okay, here's what EURCAD looks like on the intraday. So, as we noted yesterday, we were looking for that stretch into 35.73, 35.82. That was initially missed right here on this rally back on, what was this, yesterday, into the US sort of open here at 10 o'clock. We tried to stretch right into it, pulled back. This ended up being just above the 50%. Again, I took it off here to save some space on the chart. Okay, basically retraced the 50% of the move, and we sat there into the open of Asia. Momentum again finding support at 50. Then you got the subsequent 60 break, which pushed you right back into that resistance level. It continues to hold. This is still the barrier of entry, guys. We really got to get through this. Subsequent targets right at 36.20, and again, that's going to be the upper median line parallel for this formation, which basically caught the lows. Okay, so here's that trend line that Jamie threw on the charts yesterday. Either way, irrespective, you had a median line right off the high at that region. And again, that was the exact, just pips away from the stretch low that you made earlier in the month. Snap these lines for you guys. Sorry about that. There you go. So in the broader context of where we are, you still could get a pullback. This is going to be the or the bullish invalidation level key support. Same as we started the week. If you guys read the notes, we were constructive above this region, but the quick pop and reversal here in European trade into the close of Asia, or the Asia-Euro cross, kept the upside bias back in play as soon as we popped back above, right? And specifically on the fact that we closed back above it, continues to keep that sort of focus in play. There was actually a beautiful trigger for this setup here last night. Here's what it looks like on the intraday. EURCAD. Right here. So the open of Asia, AUDJPY, really nice opening range for the session. Okay. This initial break didn't give us anything in price. And I wanted to show you this because I was looking at this morning and it actually looked really compelling last night on this break, but price didn't give us a break of the opening range. So this is non-operative. But once you break the resistance trigger, okay, and you come back and pull and find support there, that's where the conviction comes for the trade. Excuse me, I'm losing my voice this morning, guys. And again, on a really tighter time frame, there you go. That's a 3-point trigger right after you hit support, and that break finally cleared the Asia opening range high. You see that? So that was your tell for the long side of EURCAD last night. You know, the opening ranges for New York haven't really been all that compelling, guys. I'll be completely frank with you over the last couple of days. It's really the AsiaPac, Sydney, Tokyo Open that's been the best play out of these. Even the European opening range. So if you look at this, for example, yesterday, as you made that false break in EURCAD to the downside, here's the European Open. European stretch into a low, you stretch into a high, you test the low, it fails, you break the highs, you're constructive against the lows, gave you that upside bias. So just keep that in mind. That was right over here. Here's your London Open. I'll drop a line for you. Okay, so London Open high, London Open low, on the break of the highs there. Again, if you want to wait for the comfort and momentum, I got no problem with that. On the pullback, verifies the opening range break, you're constructive against the lows, looking for that top side stretch. All right, so heading into the U.S. Open, where are we now? Well, we're testing the Asia lows now. The U.S. low comes in just lower. Again, this is why it's going to be our near-term support. A break below that, you're looking for a tag again of that 134.70 level, and this is going to be our bullish invalidation. So we'll be looking for possible long triggers here, especially if momentum holds 40 into the U.S. Open. On a break below that, we'll be again looking for possible long triggers here, and this is going to invalidate the long bias if we break below. I haven't really taken anything on EURCAD just yet. Kiwi was kind of the play for me last night. Again, we'll see if this thing settles into the 135 handle. The Euro-Oz trade that you threw out, Mark. No, Dan, we didn't cover cable. So, guys, any questions that you do have, trade setups, specific pairs you want to look at, feel free to post them on the message board now. I'll be more than happy to take those for you. But I just wanted to go over that Euro-Oz trade from yesterday. Here's what my performance did on it. Look, for me, it wasn't really a conviction scalp just because, well, I guess I haven't been following it long enough to really warrant the move. But here's what we were looking at yesterday, and we were coming right into a basic 38.2 retracement. The premise of the trade and why Mark wanted to look at it, very simple. It's the opening range high for the week. Okay, so he was right. You know, you're coming into an open range high. This is going to be the bearish invalidation level if we break, right? That would shift the bias to the upside. And there was a trigger break here on the 30-minute. Specifically, as we were closing the webinar, Mark was looking at this trigger. And on that break, the downside move in price, Mark, and this is why I was saying the trigger is there, but price wasn't. The downside move in price didn't give you anything as far as a trigger. Remember, it's very important to note this, guys. The momentum triggers are there as a tell to assist you to confirm what we're seeing in price. Price is everything. Price action is exactly what you need to be paying attention to. So if a trigger gives out momentum and price isn't doing anything, or you're right within a designated range, then that trigger is non-operative. Right? Was it a trigger? Yeah, it was. How did it pan out? Again, on this trade, it was actually the rebound to test that trigger again as resistance. A spike high took us through the opening range. That candle closed below. That was my entry to get into the trade. Okay? Now, truth be told, you would have achieved the 43 pips that you're looking for on this one, Mark. I don't know if you're still in that or if you took that trade. I was too quick to pull in the stop right against the swing high here once we made this quick rebound. And on that spike, I literally got stopped out like at the top of the range right before it completed the 40 pip move. So sometimes being too prudent can hurt. At the end of the day, you know, I'm much more willing to take a break-even stop than necessarily take a loss on the trade. He says, no, I closed it at 140.70. It's still a 20 pip gain on that one, right? Not bad. He says, but now I'm short from 140.90 again, and at break-even though. Let's see here if there's anything to warrant. Yeah, so I would just be cautious literally right here, Mark, because again, objectively, if this is a break of the weekly opening range, then, you know, this would hold as support, okay? If we open US trade, 930 hits, this thing breaks to the downside, I think you'll be good. I still wouldn't be looking for too much of a downside stretch. The momentum signature has changed, right, Mark? So whereas yesterday we were coming from oversold conditions, we came into 60, failed, so it gave us a trigger, right? At this point, the pullback has found support at 50, and we're right back above 60 again, right? So just some food for thought there. The only other thing I would say on this trade is what the Aussie's doing is a little concerning too. If we take a look at Aussie dollar, obviously, you know, that thing has been a pretty much one-way street since this reversal candle, outside reversal that we noted on the 22nd, took you through support at 78.75. Initial support you were looking for at 77.70. That didn't even give us a daily close. We sailed right through that. At this point, you're pretty much looking for a drop into the lower median line parallel. And that takes you into like 76.60. So on that premise, on Aussie losses, although I don't like to equate trades necessarily like that, it's going to be tough it's going to be tough to see this thing lower from here unless we break through the opening range high. Make sense, Mark? He says, yeah, plus the euro might rebound. I was hoping for 77 to hold on Aussie dollar. Right. Yeah, Aussie's been, again, we took it off the intraday page because you know, guys, I'm never going to really want you to, or advocate taking a strong scalp bias on a trade like this. When the bias is so strong and the directional play is so strong, it's always going to be in your best interest to take it more of a swing approach. There's no reason for me to get in and out of an Aussie scalp right now when the clear directional bias is to the downside. And if you have any entries on the short sub 78.47, you know, I'd be hard pressed to tell you to sit there and scalp it and get out of that position. This is a trade where you want to really ride the swing as opposed to intraday trade it. So I'm very mindful of those things when we're putting out the intraday charts to try to point you in the direction of a trade where you know, those swings will pay to be a short-term trader, right? Not just take a little chunk of a trade like this and jump out. Trade like this you kind of want to hold on to. All right, so look for support that median line parallel. Again, a little bit lower from where we are now, right around 76.70, or just about there. It's that low. That low from last month comes in at 76.80. Here's what the scalp looks like for Aussie dollar. It's actually pretty clean. 76.67, 76.81. We've already highlighted. Again, there's that swing low, but it's also a basic 7.86 retracement of the advance. Remember, as I always say, the Aussie likes these 7.86. The Kiwi likes these 7.86 retracements. Also note that the median line parallel comes right into that region. And again, no play here from a scalp basis on the short side, but certainly we'll be looking for possible long triggers here. A 60 break subsequent would be a nice reversal play, but you know, coming up on interim support here for the Aussie. So you can see, Mark, a scenario where the Aussie weakens just a little bit more. Euro Aussie gets a little pop to the upside. You know, that might be a better play necessarily than trying to take an Aussie long position, which is what Euro Aus short would be. Does that make sense? And at this point, we also just want to reset these levels, guys. This retracement has no bearing at this point. We've broken the lows. We've highlighted that region. And we're still going to want to watch that low. But we'll need some more confirmation of a near-term low being put in here on the rebound play. You tack on a quick retracement. And we will also keep this highlighted as well. Questions on Aussie dollar? Mark says, yes, gotcha. All right. Also, guys, sorry, I'm just eyeing things out while we're looking at this. Also want to see if this offers any guidance to price on a basic channel support. You can see if we draw this properly, kind of just jumped out at me while I was looking at this. Also highlights that key support region that we're coming into right around 76.80, 76.70. All right, and again, a pair that exemplifies the 40-60 rule rather well, especially in really strong trends. You'll see this, guys. But I mean, just pointing out, every rally, every topside stretch, you thought, uh-oh, the Aussie might reverse. 60 holding momentum, right back below 40. On the rally, turns ahead of 60 momentum, right back below 40. You know, the profile remains bearish. Okay, so those are the setups that we highlighted on the intraday page. Again, if you have any questions on any of these setups, guys, or on anything that we covered so far, please feel free to throw them out. A quick look at gold, which has had really rough time over the last couple of days. I just wanted to highlight this major support that we're looking at, guys. Just a basic support, trend line off the lows for the year. Confluence at the 50% gave us a range basically of 1187 into basically where we trade today, 1185. Could offer some support. Momentum doesn't really have anything very critical here, so I could see this break easily. You'd look for 1176 in the lows for the month, which come in at 1169. But the trade turned bearish here yesterday, guys. No ifs, ands, or buts beyond that. The opening range, as pitiful as it was for a very tight week, did break to the downside. The opening range for the month, here's your May open high, test the lows it holds, break, constructive against the highs, right? This invalidates that signal that we got back on the 13th. So as soon as you break back below 1200, you're no longer on the constructive side of the trade. Here we are at the first support barrier. You could get a bounce, but I'm not really interested in long side exposure unless we get back above 1200. Okay, so near-term resistance, bearish invalidation. Key support, target at 1176, 1169. All right, and again here, look at the momentum signature. Also continues to suggest that we're looking lower ever since the peak we made at the beginning of the year of January. 40 break, turn ahead of 60, turn ahead of 60. A 40 break here would pretty much solidify that the rebound is done. So we'll continue to look for that here on gold. Okay, pound. Yes, I do see some questions on the pound. Let's jump into your questions here. Who else wanted to take a look at that earlier today? Daniel Wilcox. Let's take a look at pounds. Andy also wants to take a look at it. Here's the British pound doing on the daily. So very similar setup here in that this break that we made here on Friday, guys, again, really changed things in that we took us below the lower median line parallel. It took us back below that 155 barrier, which was the swing highs that you made here for April. And more importantly, that trend line is what I've personally been watching. And if we zoom it out a little further, you can see that extending off the 2013 initial high that we made in January. Again, I've showed you this before here in the webinars. Pivot, 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 and we broke below. So not only did you have the ascending current operative, whether it's the lower median line parallel or basic trend line support, guys, nothing supersedes basic trend line and support. So the break that we made, and specifically the fact that we closed below it, has a little hesitant here to start the week because we were still trading above that parallel. Yesterday really closed the deal. On the downside, obviously you're not seeing as much significant pound losses as you are in the euro, in the Aussie, the Kiwi, and that's something to pay attention to, but that doesn't change the fact that this broke a major formation here. Now, eventually there'll be a really nice upswing, and on the intraday charts, it actually does have a pretty decent structure to the downside, giving us support very close. Here's what it looks like on the intraday. Okay, you can see that this found support right here last week at that lower median line parallel, rebounded it just ahead of it this week, and here we are again. This is the 38.2 retracement of the advance and a basic lower median line parallel. Okay, so you're coming into some near-term support right here. And this is the break that we made, obviously, on Friday's close. So Andy, your question was thoughts on the lower parallel hold, right? So here's what I'd be looking at with the pound. And again, guys, I've just been reluctant to, try to fade the dollar strength. We really want to be cautious because I'm sure there's a lot of that happening, and I'm not going to get caught on the wrong side of that trade. That being said, we have to be mindful of where the dollar is trading at this point, right? And certainly if we clear this 11,990 into the U.S. Open, which is just 20 minutes, it could be a pretty hefty rally again. But certainly on the near-term charts for the pound, yeah, I have us coming into near-term support right here. Let's take a quick retracement off this high and see if anything comes out. Yeah, looks pretty clean. Okay, so it also completes 100% extension right off the high. You see that? We're pushing through that right now, but again, we're about to head into the open, so you don't look at these pre-open swings with too much emphasis, specifically as they test these levels. We'll leave that on. So here's an example, guys. Actually, this is a really good example of a downside trigger that actually would be very a strong operative trade, in my personal opinion. You got that spike in RSI into 60, which failed very, very quickly. The pull right back below 40, and if this trigger gives out, it'd be a nice downside move. The problem is there's nowhere to put your stop on a play like this. So while this might give us directional clarity, while it might give us conviction on our bias, you know, it's not necessarily going to be a play that we can operate on. And that happens all the time, guys. And that's the one thing, you know, I'll put out a lot of radar charts. We'll put out a lot of charts on the intraday. And sometimes if you're in the position, if you took this trigger, for example, a signal like that would be welcome. Okay, that would be, you know what, hold on to the position, maybe take some off, bring your stops down. If the break happens, you know where your next target is, right? But from here, it's very, very hard to give you, you know, a go on a short scalp, even if it breaks, just because of where, you know, your stop would have to be against the highs, and that's going to be way too far open for a 40 pip scalp, right? So a trade will have to, you know, sit out on. This is why I didn't even put on the radar yesterday, even though it has very clear technical structure on the decline. You know, I just don't see a lot of conviction for any type of stops on a chase to the downside for the pound, which is already, you know, pretty far off. So we can actually add that extension right here. Some levels to the downside there if we do see a continued move lower. And again, this is just trading within a nice basic channel here. All right. Wouldn't be surprised, by the way, guys, if this spikes into a low here and catches that trend line as the dollar stretches just beyond resistance and then pulls back. The close today is going to be paramount. Obviously, if we make our way through 11,990 here with some fervor as we open up the session, we're not going to look for something like that. But you do get these spikes into key support, key resistance, and the pound is notorious for that. Just from sitting on the desk so many years, there were professional traders I knew that still wouldn't touch the pound because they know as we come into these major turns, very, very notorious for the throw over, the massive range, these types of spikes when you're making key major reversals against the trend. You get them all the time here on the pound. So you just want to be mindful of some of these fake throwovers, reversals, breakthroughs, looking like we're coming to near-term support. All right. Now, if you're hell-bent on trading the pound, there has been a couple of different pound plays that have drew our attention. Yesterday, we talked about the pound yen, and I think that one is still very much in focus for me. Here's what the pound yen looks like. Major key resistance range here between 189.69 and 190.53. Again, I know it's a larger range, but we're talking about a pair that gives you 168 pips on a daily basis. So the range is there. I'm going to let it open up a little bit. My concern is that you're seeing momentum flatten out, but basically, you know, you've been holding this formation very, very nicely. You know, momentum remains very strong. You're basically trying to get through the 2014 highs, okay, and 100% off the low is 1153. The R1 monthly pivot is in there. The median line off the low is in there. The December highs and that 100% extension. So again, a trade where something's got to give soon here. It's either going to be a topside explosion through 190.50, or you look for a break below this median line here, in which case your target is going to be right solid at the 86.50, 86.40. R1 monthly pivot, median line, which has been very clean off the lows, and a basic 236 at the pullback. Actually, this one needs to be adjusted just a little bit for that new high. Again, we don't know this is going to be the high, guys, but assuming that we do get the pullback, you want to know where the level is going to be. And that brings you even closer to that R1. All right. So again, trade that's poised. I don't really see anything here just yet. I'm not going to start fading the rally until we get some sort of near-term signal. But here's what we look like on the intraday. So you can see I've actually been tracking this one like a hawk in intraday action. Let me clean it up just a little bit. This is what I was watching yesterday for a short signal. Never panned out. Never panned out. You had a 3-point touch trigger. This looked like it wanted to break as you were heading into, again, a basic median line resistance, 786 retracement. Didn't do anything, right? The signal never came. So we kind of blasted through, and I haven't checked it out since. Let's go ahead and rework these levels real quick. There's the new retracement. I'm going to leave this median line here for now, and a break below this, since this is basically the opening range lows for Europe right here. A break below, let's say 89.40, 89.50, in my personal opinion, would put the short side in focus. You're getting some divergence all through these highs. So higher high, higher high, higher high, lower high, lower high. And the trigger that we were looking at yesterday finally did break. Finally did break. So, you know, we'll see if this moves sub 89.50, 89.40 here on sterling yen. Bottom line, this whole region's so critical. It's really the break below that median line parallel that you'd want to see to give you conviction on the reversal play. Questions on pound yen. So Mark Lavender, I got you right ahead of that question. I hadn't even seen that. Sorry about that. Mark, does that offer any clarity for you, Mr. Lavender, on pound yen? If I had to pick a pound pair to trade, this would be one of the ones I'd be focused on more so. He says that does. Thanks. You're more than welcome. There was another one that we looked at yesterday. Can someone remind me? I think I wrote it down somewhere. Pound CAD, was it? Yes, it was pound CAD. Here it is. Pound CAD. Support at 194. Right. So, okay, I'm sorry. Here's what we were talking about yesterday, guys. Just reviewing my notes. 190.20 to 190.40 was the range of support. Remember, the median line is off there, off the lows. This is an old dated median line that goes all the way back to the lows you made for 2014. But you also had this fib cluster here, a 1618 off the low, a 618 off the high. My favorite setups. Really nice pivots, and specifically when the trend lines map up with it, you know, they tend to be nice rebounds. So yesterday, you saw the pullback right into that region, give us a nice rebound higher. And let's address really quick the intraday chart. And what's missing here is, oh, the extension. Boom. Okay, key near-term support and the bullish invalidation level right here. And that range between 90.20 and 90.40, like we noted on the daily. As far as topside targets are concerned, a break from here, basically you got to get through 92, but a break through the 92 handle looks for 92.90, and that is the high day close. Beautiful targets. So, near-term support and bullish invalidation, breakout target. Let's clean up some of these clusters. And we'll bring this out to the outside of the range here. All right, so those are your sort of amended sterling CAD levels on the go. Here's your daily chart. Again, I would want to keep an eye on this trend line just on account of the 3-touch trigger. Obviously, you got a break here and a reversal, but we're going to continue to eye that as it holds right around that 60 range. And momentum continues to flatten out here. So technically, in my mind, I do see this as divergence. Remember, all you're looking for in divergence is that price action, is that the oscillator is not confirming an extreme in price. Or the oscillator, rather, is not confirming an extreme in price. Sorry about that. So as you see price press into a higher high, even if the oscillator holds equal highs, that, in my mind, is still divergence. Because price action is pressing into an extreme, and the oscillator is not confirming it. So on the back of that, if we get that trigger break or move sub 50 and then a move below 90.20, might be a nice near-term reversal play for the pound CAD. At the end of the day, this is still the bullish invalidation level. Pullbacks into this region, you're looking for long exposure, you're looking for long triggers. One thing I do want to just note, I've been getting a lot of responses from you guys on Twitter and some feedback through email, which I just want to thank you. It's been absolutely priceless for us as we continue to build out the service. But one of the questions that came up was, hey, we're coming into a resistance target. Should I be looking to short from that level? Guys, remember, when we're intraday trading, it's a different mentality than swing trades. I can't advocate taking a short just because we've achieved that level, right? The level comes in, great. Now I'm looking for a short trigger on the 5-minute chart. Okay, I'm looking for momentum turnover. What is the momentum profile saying? Is there a major key resistance level I'm trading against? If we're coming into that and I get the trigger, sure, then I'll fade it. But I can't, simply just throw in a short on a rally because I think there's resistance there and use that as a scalp. Okay, our stops are too tight, and that type of strategy is gonna, in the long run, be more painful than pleasurable. Let's just say that. So we want to make sure that we're keeping that in mind. It's not just achieving that level or getting there, but there needs to be a trigger in momentum. Okay, so I hope that offers a little bit of clarity towards some of those questions that were coming over. I do encourage you to reach out to us if you do have any questions. Twitter is going to be the best way. You always get the quickest response, but I will try to get back to you. The dollar yen. Everyone's looking at the dollar yen. I guess it's the biggest mover. I get it, but unless you're on, unless you caught the breakout from an intraday strategy for us guys, I just don't really see much here. I know that the range has been huge over the last 36 hours, but on average, you're still only getting about 80 pips a day on this thing. Okay, so from a scalping standpoint, for our purposes, for our discipline, I'd still rather focus in the yen crosses. I'd have a much better, comfort playing the pound yen or euro yen once those finally give us those breaks. That being said, yes, I do have 123.70 as a near-term resistance target. I'm not sure where I got that from. Now I do. High day close, 2007. Okay, specifically on June 22nd of 2007, the day the high was made, the close of that session was 123.79. Okay, today's high so far, 123.77. Okay, so just pips off. The actual stretch high comes in at 124.13, but the high day close, again, I typically have these labeled just so when I hover on them, at least I can see what the level is. Okay, and that's near-term resistance. I mean, I don't really have a play for you here on this one, Mark, as far as sort of an intraday type of setup is going, but let's delve into the 30-minute and see if we have any clarity on this one. I think there was a structure we were watching on this yesterday. Okay, snap some of those levels for you there. All right. So let's clean this up a little bit. These slope lines offered some really nice guidance on the way down. Here's what we broke out of yesterday or earlier in the week. I guess if we tweak this right to the lows. Okay. Mark, I just saw your link here. So more looking for a swing. Dollar yen is reacting to resistance. Mark Haberman looking for not really a scalp, more watching as a swing setup. I see what you're looking at there. Let me share this with the group here so they can see what one rendition here. So here's what Mark's looking at. And I don't think you're too far off on this one, Mark. I haven't really done much intraday analysis on this, but I don't think you're too far off. This is Mark's dollar yen chart. He's looking at these slope lines off the low. This is from, looks like, 429. So you're looking off this slope. Yeah, I could see that. Sure. So let's go back to the daily chart real quick. So these are the slope lines that you're looking at, Mark. And it makes sense as far as finding some near-term resistance. Again, yeah, I would have to agree with you from the perspective of a swing trade. It makes a little bit more sense, right? Just on account of the risk to reward on the trade. That being said, again, I'd be hard pressed to try to fight this. Do you know what I mean? You need a little bit more conviction that a high has been put in. And if the dollar index turns around, or if we do get a hold into this resistance region on a closed basis today, I'd be much more comfortable trying to attack that play. But even in such a scenario, Mark, even in such a scenario, the dollar yen might not be the best bet for your buck on the yen crosses, right? Aussie yen, which was on the scalp radar yesterday, didn't give us much play yesterday, so I kind of left it off the radar last night. But I'm still in focus here below 95.50, right? That's going to be for me on a closed basis a validation for a near-term rebound off of this same slope line we've been following, right? And even on the intraday chart for Aussie yen, here's what we're looking at. That same level that we highlighted as the bullish invalidation level. Yeah, we didn't really get too deep into it, but we're still holding above that. Now, momentum has been all over the place, which is why I can't really put this under a conviction bias. But you're above 70, you're below 40, you're holding 60 now. Looks like it's turning over, but you're at the lows. So essentially, the focus is still on that 94.90 support barrier. On the upside, like I said, we really need to clear above 95.50 on a closed basis to get a reversal on that one. All right. So hope that helps give you some clarity. Mark says, okay, understand. That's what I have to learn. Still is picking the right pairs. Yeah, and Mark, we'll have no problems doing analysis across the board. I do want to have a broad sort of idea of what's going on some of the crosses, but the ones that we're going to operate on, obviously, that's going to be a case-to-case basis with what's giving us the clearest triggers, what's giving us, the clearest technical picture. Dan says Euro Pound. I know that Euro Pound is something that Jamie's watching for sure. For me, never a pair I'm ever gonna scalp. Just to put it plainly out there. For those of you who know or have been with me for a while, I call that the grandpa trade. 82 pips. We're calling that tight on dollar yen. That's actually massive for Euro Pound. This thing has given us a daily ATR at 30 pips for months before. So for me, a guy who's trading near term, it's hard for me to squeeze out anything on this thing. I don't even have, Dan, a scalp for Euro Pound. Just being completely frank with you, man. It's just not something that I'll ever trade on an intraday basis. I mean, maybe once things start picking up, right? But this thing will sit in a range for months, and then even that range is, I mean, you're trying to squeeze water from a rock. So I really don't have an intraday trade set up for you on this one. I do want to note that the low day close, which is being shifted here, is being tested right now as support. That's the low day close for 2015 trade that you made back here on March 11th. A break below that, this is a trade where I'll just work with the pivots. They tend to work. By the way, pivots, ideally, guys, are in equities in a market that has an actual basis close. Okay, that's kind of where pivot structures give us the strongest type of technical analysis. I don't really work pivots very often in FX, but on a trade like this, it's going to be your next downside target, and that's basically at the 70 handle. So it's kind of a trade you want to sit in from a swing standpoint for sure, longer term. I do think you look for some sort of low in the British pound near term, just on the case that momentum still fails to push below 40 here, and you are in fact getting divergence. From a fundamental standpoint, yes, I do favor the downside longer term. Okay, the divergence you're seeing in policy alone should start to push the sterling higher, and that should inherently keep downside pressure on the pair. Intraday is definitely a joke for this pair, says Dan. Thank you. Hey, you're more than welcome. And Dan, I don't want to, necessarily dissuade you from taking something that you might be seeing as a strong position on a longer term play. But for intraday, man, I mean, it's just not my cup of tea. Just not my cup of tea. Here's the start of the week. There's not even, an opening range. You're pressing a lower low, lower low, lower low. Not really going to be the ideal play. To each their own for Grandpa, says Eileen. And guys, with that, we're going to go ahead and wrap it up for this session. Again, thanks to everyone who attended. We'll be back on tomorrow morning at 8:30 Eastern for another intraday session. Don't go anywhere. Remember that at 1 p.m. Eastern today, Jamie will be doing his midweek strategy session. So for sure, stay tuned for that at 1 p.m. Till then, best of luck trading, guys, and we will see you tomorrow morning. Cheers.